Up next, Forum Daily's weekly crypto and digital asset update with Catherine Murray, the host of The Buck Stops Here. All yours, Catherine.
Hello, everyone, and welcome to your weekly crypto and digital asset update. I'm Catherine Murray. Well, we have seen dramatic declines in cryptocurrencies alongside the equity market capitulation this week on rising rate fears to combat inflation. We've seen investors fleeing risk assets, including digital assets, but we also have to remember that this is still very much an emerging asset class. Now, at the same time, it's worth mentioning crypto has seen an increase in correlation with the equity markets and stand at about 0.67 to 0.78, more than triple the correlation we saw back in 2019 and 2021. Why is this important? Because investors really like the uncorrelated aspect of the asset and maybe bought it as a bit of a hedge against traditional assets. Interestingly, some say that the reason for the increased correlation with the bond and equity markets is because more hedge funds and traditional money managers are actually becoming more active in the space. The drawdown is causing Swiss wealth manager Julius Baer to perhaps see an opportunity and move into the space, offering crypto services to its clients, with the CEO saying it has a transformative potential. We've also seen Goldman Sachs alongside Barclays and some venture capital firms announce a $70 million Series A round for Elwood Technologies, which is a trading platform that helps institutions access crypto markets. So there's no stopping there. We've also been reporting on the global uptake of crypto and digital assets by countries and companies around the world. Add to the list Brazil. B3, the Brazilian stock exchange, will begin trading Bitcoin futures within 3 to 6 months. And in the corporate news front, Shopify is expanding their crypto payment options with Crypto.com as another way for accepting crypto payments. Shop CEO John Lee said our growing blockchain ecosystem demonstrates their commitment to supporting merchants with alternative payment methods. And as a bonus, Shop merchants using Crypto.com will not pay settlement fees for 1 month. And we certainly do continue to see the crossover of crypto into the traditional asset classes, this time the $100 trillion bond market. Babel Financial announced Thursday it has issued its first collateralized USDC note. It's a smart contract-based global debt instrument provided by blockchain startup FQX. So as I understand it, a blockchain-based debt instrument that can be used globally for a variety of financing purposes. Why is this important, or why and what do we think it means? It seems to demonstrate FQX's proof of concept of a move towards decentralizing finance, which recall, going back to the very beginning of Bitcoin, is what crypto was kind of all about and digital assets are all about, moving away from government and central banks' control of currencies as well as interest rates. Speaking of which, I do want to just address the market downdraft that we've seen this week with the Dow down over 1,100 points in one day, obviously on concerns that we are seeing inflation and what will the U.S. Federal Reserve do about it? How aggressive will they be? If they are in fact aggressive, they will end up perhaps putting additional downward pressure on valuations within the stock market. Interestingly, Wall Street Journal points out that a handful of stocks are responsible for 46% of the S&P 500 2022 losses through Wednesday of this week. So again, it's really the high valuation tech stocks that we are seeing really put some downward pressure on the overall market. Having said all of this, though, I would also point out that we are seeing diverging views of central bankers. The reason why we actually saw a bit of a pop in the market to start today on Friday was because China decreased their rates. You've got two of the largest world economies and having different central bank policies, the US raising rates, China lowering rates, the US trying to combat inflation, China trying to grow growth. So we've got to watch what that might mean in terms of how that impacts our markets. I will, however, say that with the US Federal Reserve, it is possible with so much focus on inflation, they might also start focusing on financial stability. We've got a rising US dollar, which is very, very painful for emerging markets, which in fact could cause financial instability. This is an out of consensus call, but there could be a bit of a point where the US Federal Reserve has to also look at the pain that the strong US dollar is causing on other markets, the financial instability that that could cause, and therefore maybe they won't be as aggressive. Nima, back to you.
Thanks for that, Catherine. Lots to watch for. For more analysis and news on the financial markets, be sure to tune in to Catherine Murray on the Buck Stops Here.